Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. futures falling and Treasuries edge higher, underscoring a cautious mood heading into the markets reopening after a holiday. WTI crude rising as traders price in higher geopolitical risk as Iran holds naval exercises before talks with the U.S. in Geneva today. Plus, BHP jumps after the world's largest miner reports strong first-half profit boosted by the copper rally. Well, it's just gone 9 a.m. across the Emirates. I'm Johanna Versace in Dubai. I'm going to be honest with you. Yesterday was very thin liquidity in these markets. It's obviously Lunar New Year, so Happy New Year to anyone who is celebrating, which means many of these Asian markets are closed for business, with the exception of the Nikkei. We're going to talk about that in a moment. But then we also had the President's Day in the U.S. as well, which meant it was a U.S. holiday, very thin trading there too. So the setup going into today's reopening of these U.S. markets is leaning towards more cautious. We have negative futures, S&P futures, pointing to declines of 0.4%. The Nikkei also a bit of a pullback. Remember, post the elections that took place, we did rally to an all-time record high. So perhaps a little bit of profit taking is coming through on the Japanese index. SoftBank is one of the major decliners there, down 5% today in trading. So 0.8% weaker there. Gold also in focus, not really managing to stay above $5,000 the last couple of sessions. So you could say perhaps a little bit more profit taking is coming through there, especially after we had that softer than expected CPI print on Friday. The market was quick to price in slightly more interest rate cuts out of the Fed for the rest of this year, which obviously is a good thing for gold. But on the back of that, we got sold into it. So people just reducing some positions. Gold has rallied 50% since the lows it got to a couple of weeks ago. And then Brent, all eyes on the commodities complex and oil complex today. We are trading just shy of $69. Again, trending a little bit weaker today, down 0.5%. But this ahead of those negotiations taking place between Iran and U.S. Indirect negotiations, I should say, in Geneva today. At the same time, the Iranians have said that they've been doing military exercises around the Strait of Hormuz. So there is somewhat of a military buildup on both sides. But the negotiations, the second round of negotiations, are continuing. We're going to preview that on the show as well. Now, let's talk more about markets and so forth. For Market Insights, joining us is Anita Krishna Gupta, Wealthbrix Capital Partners CIO. Really good to have you on. I don't think we've spoken yet together this year, so Happy New Year on both fronts. Let's just talk about the global equities performance, because actually I was taking a look at year-to-date performance, and you could say that what's happened this year has been the end of U.S. exceptionalism, because U.S. stocks haven't done that much, but Asian stocks have massively outperformed. Even European markets have done okay so far.
Yeah, so we are seeing Asia take the lead in 2026, but it's not China. It's other countries that are up. So if you look at Asia, starting with Japan, of course, and with a new leader out there, Sanae Takaichi, and her reform policies, Japan very much in the lead and very fundamentally. So even despite the reform policy, there's lots to say for the Japan market continuing to go up, probably gain another 7 to 10% in our view this year. So it's a shift away from U.S. exceptionalism, as you rightly said. You've got, in spite of all that volatility that we are seeing, global equities are up almost 3% this year. But again, you've got emerging markets up 10% and developed markets which are just up, about 1%, led by Japan. U.S. is flat. Tech, US tech is down, but China tech is not up either. So it's a very different year. And yes, we are talking about exceptionalism coming in from other markets now, but not necessarily China.
Yeah, really good point. And I know that you've been quite bullish, Japan. You say that you expect the Nikkei to go up, what, another 7 to 10%?
That's right.
You said? Okay, the
That's
rest of the year. You're not taking chips off the table then now into the strength?
Oh, no, absolutely not, because there are a great number of factors which are beneficial to what's happening in Japan. First of all, it is still a leader in technology, a leader in robotics. You've got the leader who's got the House majority. So that's very easy for her to pass reforms. And she is focused on both, fiscal as well as, taking up the economic growth. Also, at this point, you've got inflation under control in Japan. So while we do expect, 2 to 3 rate hikes, what we are seeing is the JGBs, the long end is not, at this point spiking up. Yeah.
Well, this is what I wanted to ask you, because a couple of weeks ago, especially when 30-year JGBs hit 4%, I think there was a lot of fear in the market.
Yes.
But we've turned around since then. To what extent is your equities view predicated on there being some form of stability in the long end part of the yield curve?
It's very important for us, and that's what we have been, we've been, writing and talking about the fact that, everything needs to hold together. There is an expectation both in terms of wage growth, in terms of where the rate hikes come in terms of, controlling inflation. So we've also got the yen. So, in addition to where we need JGBs to be stable, because that does affect the equity markets if the yield spikes up too much. We've also got at this point the yen. So there is a sweet spot for the yen. We don't want it to either strengthen too much, that's bad for exporters, and nor depreciate too much.
On the AI trades, 2 themes have emerged this year. Number 1 is a shortage for memory chips.
Oh, yes.
That's playing out in the cost base. Number 2 is AI disrupting software players in the space. Do you think this, I don't know what they're calling it, software as a service Armageddon or sell-off, or whatever. Exactly, whatever the term is. Do you think it's gone too far at this point? Are many of these very substantial blue chip names oversold?
So what we have seen in the S&P 500, if you look at the subsector indexes, and we have seen all the service subsector indexes, right from financial services to anything to do with data analytics, fall 25% year to date. That's huge. And what we're seeing go up is some of what we call real assets. The other subsector that's really gone up, of course, is memory. You're looking at chips. And now chips, there are 3 main companies which are, for memory chips, which is, of course, SK Hynix, Samsung, and Micron. Now, these continue to, spend money. We've got Micron talking about spending $200 billion on, increasing capacity. So that's affecting the larger companies such as Apple. Now, Apple, about 10% of the cost of an iPhone comes from, memory chips. Now, if those go up by 200% in terms of cost, it does impact the price of an iPhone by about 15%. So you've got those factors coming into play for the larger players. At the same time, what we are seeing, talking about, what's happening as service as a sector, and you're seeing, a big fall because you've got, of course, we're all talking about Anthropic's Claude, which is, being able to provide legal, financial, healthcare, all kinds of, service. You can, Claude can, code it for you and give you an answer. I mean, we are all experimenting with Claude ourselves, and we know how easy it is to use. So, yes, I would say markets are now reacting very fast. Technology obsolescence is very, quick nowadays. It accelerates faster, yet new solutions come in. So watch the space and, figure skating, there are winners and losers.
Yeah, no, absolutely. But it's very difficult to determine who those winners and losers are. What about other parts of the U.S. economy? I mean, again, I was just talking about energy. Energy in the last couple of days outperforming consumer discretionary. So did you see a form of rotation that has legs in the U.S. going on?
I wouldn't say that energy is the rotation. What we are seeing, what is benefiting this year is definitely, real estate with rates being lower. But again, we're looking at the rotation. I think the rotation would be rather within technology itself. U.S. stays a very integral part of portfolios. I always emphasize that. You cannot duplicate U.S. companies. U.S. companies are truly global. 50% of the NASDAQ revenues come from overseas. So you cannot duplicate that, and they are global. It's not just US. And what we are seeing is the shift away is definitely emerging markets. You're going to get some money flowing into emerging markets, plenty of growth there. We've just got, companies like AMD talking about tying up with Tata Consultancy in India. So it's not just about technology in the US. Defense is a big sector that's going to continue to benefit. So rotation into defense is going to continue, rotation into healthcare. But as I said, it's very difficult to keep pace with what's happening in this whole apocalypse.
Yeah. Anita, really good to chat to you. Thank you so much for coming on. Anita Krishna Gupta, Wealthbrix Capital Partners, CIO. Well, coming up, President Trump says he will be indirectly involved in discussions with Iran as U.S.-Iran talks are set to resume later today. More on what to expect next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Iran's Foreign Minister Abbas Araghchi held talks with the head of the UN's atomic watchdog in Geneva on Monday. Iranian state TV is reporting Araghchi discussed proposals he will be presenting at his next indirect talks with the U.S. Special Envoy Steve Witkoff later today. President Trump says he will be indirectly involved in those talks with Iran.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. I mean, it's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
Anwar Ant, Bloomberg's managing editor for Middle East and North Africa, joins me now. So, Anwar, yesterday we were talking about the fact that there is going to be a second round of negotiations. We know they're taking place in Geneva this week. And yesterday, the Iranian Foreign Minister Abbas Araghchi had a meeting with the head of the IAEA. How much is that meeting going to act as a precursor to what's going to be discussed this week during the course of those indirect negotiations between U.S. and Iran?
What's clear from yesterday's meeting is that Iran, going into the planned talks with the U.S. In Geneva, possibly later today, is that they're going to treat this as a place to negotiate possible curbs on Iran's nuclear enrichment activities in return for an easing of sanctions on the country. We know as much from Abbas Araghchi's comments over the last few days. Iran has treated the right to enrich uranium on its soil as an inviolable right under the Nuclear Non-Proliferation Treaty. Now, having said that, we have seen Araghchi signaling some flexibility around that issue, but he linked that to a possible lifting of sanctions on the country by the U.S. So today's talks will primarily be about this key issue. But what is important to note about today's meeting is, Jumana, is that these are not one-off. President Trump himself said that talks with Iran could drag on for as much as a month.
Yeah, okay, so it's going to take some time. At the same time, we hear of a substantial military buildup, right? Another aircraft carrier, presumably on its way to the region as well. And then overnight, the Iranians saying that they're conducting military drills around the Strait of Hormuz. So how do you dovetail the two together?
Well, as you know, the U.S. buildup has already been massive. But yes, there is a second aircraft carrier on the way to the region. Possibly will be here in the next week or two, judging by the previous deployments. So yes, it's going to get even bigger, and it allows Trump to basically continue to threaten the Islamic Republic with military action should they fail to reach a compromise in talks taking place in places like such as Geneva and Oman. On the other hand, Iran, possibly for the first time in a very long time, has conducted these drills in the Gulf of, in the Strait of Hormuz and the Sea of Oman. What is important to note about yesterday's drills is that the language, the narrative around those drills has been very specific, and they said they were aimed at maintaining a smart control of the passageway, which is a crucial passageway for about a fifth of the world's oil exports, as you know. And they also cited Iran's geostrategic advantages should there be a threat to the Islamic Republic coming from the region. So yes, and clearly oil markets are taking note. We have seen that the oil, which has for the first time since the beginning of this year posted weekly declines just last week, reacted to those events. And as of this morning, it looks like oil prices were a little changed, if anything.
Anwar, thank you so much. Well, that was Anwar Ant, Bloomberg's managing editor for Middle East and North Africa. But there's also another round of U.S. broker talks, also between Russia and Ukraine, set to get underway in Geneva with major sticking points still unresolved. The negotiations come amid continued fighting and deep divisions over land and security guarantees. For more, we're now joined by Bloomberg's Anthony Halpin. So it's going to be a busy day for the U.S. diplomats and for Steve Witkoff, no doubt, with both sets of very high-level negotiations taking place. And what's at stake with Ukraine, Russia, and how much potential is there really for a breakthrough, given the fact that the war still rages on?
Yeah, I mean, Steve Witkoff is the common factor in both those sets of talks. These are the third trilateral talks involving Russian and Ukrainian negotiators. The first two were here, in fact, in Abu Dhabi. They focus very much on military technical details. We're told that these latest talks will be much broader. They'll focus on the really main outstanding question, which is the issue of territory, Russia's continued demands for territory in Ukraine that it doesn't occupy, and Ukraine's refusal to accept those demands. The US is trying to broker some sort of acceptable agreement between the two sides. So far, that's elusive.
What I'm trying to understand is the relationship that President Trump has with President Zelensky, because there was that Oval Office bust-up, and then there was the reconciliation, and then every so often he'll say something which also, is thinly laced criticism, once again, of the president. And yesterday he was saying that there are going to be big talks, but Ukraine better come to the table fast, putting the onus on Ukraine once again.
Yeah, it's really quite striking, that kind of language, when you consider that, in fact, Russia invaded Ukraine. This is Ukrainian sovereign territory. And Trump is essentially saying to Ukraine, look, you better cut a deal to give up some of your territory in order for this war to come to an end. And unsurprisingly, that's not appealing to President Zelensky or the Ukrainian people. We don't yet know whether they can find a form of words that lets them reach a deal. But it is very striking that the US position essentially leans more towards the Kremlin than it does towards the victim in this war.
Yeah, and maybe, slightly different tack, but also interconnected. Secretary of State Marco Rubio, who was at the Munich Security Conference, seems to have lent his support to Viktor Orban. How should we be reading that? Yeah,
another really striking intervention from the US.
Yeah.
I mean, Viktor Orban is engaged in a really intense struggle to keep power in Hungary. The election is coming up soon, and he's facing a serious challenge. The US has basically parked its flag on his administration and said, we essentially want to see you re-elected. And it's in line very much with the Trump administration's policy, really, of trying to advance MAGA-friendly administrations in Europe that are more receptive to Trump's message, to Trump's foreign policy than many other countries in Europe are.
It's interesting that the Europeans actually have been laying low on that front, because the more they criticize, the more fuel that Orban gets. So the U.S. taking a different approach there. Tony, thank you so much. Bloomberg's Anthony Halpin. Now for a look at some of the other stories we're following today. President Trump says he is speaking with his Chinese counterpart Xi Jinping about weapon sales to Taiwan. Speaking aboard Air Force One, Trump said he would make a decision soon. China has previously warned the U.S. to handle arms sales to Taipei with the utmost caution. U.S. President Donald Trump says that government officials, including Marco Rubio, are in discussions with Cuba's communist regime. He said Cuba should, quote, absolutely make a deal as the nation faces worsening economic conditions. Rubio, in an interview last week, signaled the administration is willing to offer more humanitarian aid as the country scrambles to adjust in the weeks since Maduro's ouster. Israel's economy is showing signs of recovery after 2 years of war. The country's GDP expanded 3.1% last year, beating projections from the finance ministry and the central bank. The rebound was driven by stronger exports and a jump in investment, with gross fixed capital formation rising sharply. And a majority of Canadians say they are open to buying Chinese-made electric vehicles as Prime Minister Mark Carney lowers tariffs on imports. According to a new poll, 53% say a vehicle's Chinese origin would have no impact on their decision, while 15% say it would make them more likely to buy. The results mark a sharp shift from last year, when most Canadians were wary of purchasing Chinese EVs. Coming up, bumper profits. BHP's diversification strategy pays off as copper's rally lifts the bottom line. Our interview with the CFO of the world's largest miner is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. BHP shares hit a record in Sydney after first half earnings rose by more than a fifth thanks to a surge in copper prices. We spoke to the CFO earlier about the miner's strategy for the copper business.
Very pleased with the copper performance in the half, along with the rest of the portfolio, Paul. For the first time, 50%, more than just about 50% of our earnings, EBITDA, came from copper, and performance across our assets has been very good. To take example of Escondida, which is our largest mine that we run in Chile, we are revising the guidance up for this year and next year, which means that we will be producing more copper in the constructive copper price environment that we are in. So very pleased with that. And not only that, across our assets, as you would know, we have a lot of byproduct in our copper segment. In our assets, in the half, almost $2 billion of byproduct revenue was booked across gold, silver, and uranium. So a fantastic business and really reliable performance coming through across all our assets, with more to come in terms of the higher guidance for Escondida, for example, that I have given, along with the outlook on medium term with the copper projects. We have 4 very attractive copper programs around the world, in Chile, in Argentina, in Australia, and in the US, which means that we will increase our copper production from where we are into the future as well. Just last 4 years, copper has increased by 30% in production volume, and we are the largest copper producer in the world. So from here, we go into increase in copper to 2.5 million tons of copper equivalent, including byproducts, volume by mid-30s.
Now, you, of course, made a bid for Anglo American's copper assets last year, which wasn't successful. But do you see there being more just asset-specific M&A coming forward, or blockbuster deals? What are you looking at doing in this space?
So look, we are very deliberate in the way we execute our strategy, and that is not predicated on inorganic or M&A growth. Of course, we are a big company, so if there are opportunities to bolster our organic portfolio, which is massive, with inorganic opportunities, we do so. But the bar for that is very high. It has to create shareholder value, has to be with discipline, and has to be good quality assets.
Well, that was Vandita Pant, CFO of BHP. Now for a look at some of the other stories we're following today. Bloomberg has learned that Anthropic's talks with the Pentagon about extending a contract have hit a snag. Sources say Anthropic wants to put guardrails in place to prevent its Claude AI tool from being used for mass surveillance or for developing weapons that could operate without human involvement. The company says it's having productive discussions with the Defense Department on the issue. Bloomberg has learned that SpaceX and xAI are competing in a secretive new Pentagon contest to produce voice-controlled autonomous drone swarming technology. Sources say Elon Musk's companies are amongst only a few selected to compete in the $100 million prize challenge. And coming up, the latest PMI data across the Gulf region points to a mixed start to the year. We'll speak with Simon Williams, Chief Economist for CEEMEA from HSBC. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. futures falling and Treasuries edge higher, underscoring a cautious mood heading into the market's reopening after a holiday. WTI crude rising as traders price in higher geopolitical risk as Iran holds naval exercises before talks with the U.S. in Geneva today. Plus, BHP jumps after the world's largest miner reports strong first-half profit boosted by the copper rally. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Once again, happy Lunar New Year for those celebrating. Many of these Asian markets closed today. But we are seeing global markets trade with somewhat of a cautious tone. The U.S. also out for President's Day yesterday today. So today we'll see the resumption of cash trading. Into today, S&P futures are leaning negative, down about 0.5%. I will say in terms of milestones to watch out for in the U.S. this week, we do have the PCE number to watch out for, and this is after Friday's more benign CPI inflation prints and those Fed minutes. So those are all coming up later this week. The Nikkei handover, it's one of the few indices that's actually open in Asia, but today we are seeing a bit of profit taking come through from the Japanese index, but of course touching all-time record highs just a week ago. So we're pulling back about 0.9% this morning. Gold, we are down actually quite a lot now, down 2%. This is accelerated just in the last half hour. When we last looked at it, we were trading above 4,900, and it really just speaks to still a lot of underlying volatility in that asset class. And into the weaker CPI print on Friday, we saw an uplift in gold that was met by a bout of profit-taking. Since the rout that we had a couple of weeks ago, gold is up 50%. And then Brent also in focus, dipping a little bit today, down 0.6%. But the theme has been one of geopolitical premium buildup, big negotiations at stake, Iran-U.S. negotiations continuing in Geneva this week. The Iranians met with the head of the IEA yesterday to discuss their nuclear program, and at the same time are conducting military exercises around the Strait of Hormuz. So all of that to be factored in to where oil is trading today, just above $68 in Brent space. Well, the banker who helped turn Saudi Arabia into one of the world's most prolific bond issuers is now taking on a new challenge. Fahad Al-Saif has been named investment minister, and he is tasked with tripling annual foreign direct investment to $100 billion by 2030. A veteran of the finance ministry and the Public Investment Fund, the PIF, Al-Saif will spearhead Riyadh's push to attract more overseas capital as the kingdom scales back mega project spending and advances its economic diversification plans. And the latest PMI data across the Gulf region point to a mixed start to the year. Activity strengthened in the UAE, led by gains in Dubai's travel and tourism sector. And over in Saudi Arabia, the headline reading remains firmly in expansion territory, but has now softened for a third consecutive month. Joining us now to break it all down is Simon Williams, Chief Economist for CEEMEA at HSBC. So maybe let's just start with that broad overview of how, more generally, the region is faring and shaping up into 2026. A lot of headline risk, obviously, but seems to be quite resilient under the surface.
The headline there, risk is there, the geopolitical risk is there, but the kind of data I'm seeing coming to year end is strong. You mentioned the PI numbers, firmly expansionary for the two biggest economies in the GCC, Saudi Arabia and the UAE. We've had the flash Saudi Arabia GDP print as well for Q4. Again, expansionary and a pickup of momentum running through that non-oil sector.
So I had the opportunity to speak with the Saudi finance minister a week ago at the Al-Ula conference, and we spoke about the numbers. And I thought it was interesting that there was such an upswing in GDP, the strongest GDP posted since 2022. There is an impact coming in from the oil part of the economy. What are you seeing in the non-oil segments of the economy? Because if you sort of zoom out a little bit, there's been a slight moderation over the course of 2025?
Yeah, there has. And you mentioned the PMI numbers being a little softer for a third consecutive month. That's certainly true. We'll be looking at Saudi GDP. It's not the headline number that we focus on. It's very volatile depending on what's happening with oil output. It's all about the non-oil sector. I've got growth in the non-oil sector running along at about 4%. That was close to what we had in the flash GDP data. The critical thing will be when we get the full breakdown there to see what's happening with private consumption and to see what's happening with investment as well.
And with even all of these recalibration, reprioritization, PIF are going to launch their new strategy, hopefully in the coming weeks, so we'll get more color on that. You still see non-oil growth around the 4% mark. It's not going to have an impact.
I think that's about the potential growth rate that we're looking at. Again, we'll need to see the details of the plans. I'm still expecting capital spending in Saudi Arabia to be strong, even as that recalibration starts to take effect.
Yeah. FDI, a big focus, a big ambition for Saudi 2030. They've just reshuffled the cabinet. In the introduction, we were just talking about the new investment minister, who was the former head of investment strategy from PIF. And their stated target is to bring in $100 billion worth of FDI by 2030, which is triple the current annual level. Speak to us of the challenges that the kingdom has faced in attracting the FDI. Why has it been such an uphill climb?
It takes time. It takes time for the outside world to understand the opportunities available in an economy like Saudi Arabia. But FDI is just one part of a broader funding mix that Saudi Arabia is putting together. You mentioned the increase in debt issuance. That's one part of it, drawing foreign capital into the domestic debt market. That's another, drawing foreign capital into the local equity market as well. FDI sits inside the overall funding mix. Yeah.
Okay, so big focus still for the kingdom. On a slightly different tact, I know that you just had a roadshow. You came back from London, slightly jet-lagged, I believe. But you said there was a lot of interest around Egypt from investors, and very few of the people that you spoke to are actually bearish on the Egyptian macroeconomics here. What has been the catalyst for this turnaround in sentiment, do you think?
Yeah, we saw a lot of people last week talking about the Middle East. Clearly a lot of interest still in what's happening here in the GCC, but absolutely Egypt is front and centre of mind for many investors working across asset classes. Some of that is about the global environment, falling US rates, a weaker US dollar. It's been positive for many emerging markets, but there's also a recognition of the underlying rebalancing that's taking place in Egypt. Inflation is coming down, the currency is turning. The big improvement and the current account, the overall balance of payments position as well, has really drawn the attention of foreign investors. The sense that growth is also starting to turn gives you that feel that we're going from the rebalancing stage into the recovery stage. And in emerging markets right now, it's hard to find a better story.
Well, the central bank cut rates last week, 100 basis points, which is pretty much priced in by the market. Is that also perceived a net positive to investors, and that the central bank can actually embark on this easing cycle without concerns about dollar liquidity?
Yeah, we'd expected a 100 cut, and that's what we got as part of that continuing easing cycle. But what's key, I think, is even with that cut, the real policy rate is still very high. That big real rate buffer in an environment where the currency is trading so well, I think, is giving a lot of reassurance to investors overseas, and there's a strong expectation of more cuts to come.
Yeah, and what is the expectation for the IMF discussions? I believe end of this month there should be discussions around another program, extension of the program. Is there optimism from the investor community that they will come to another agreement with the IMF?
We've got the staff level agreement going into the end of last year, so we're waiting for broad approval to get the next disbursement through. But really, that IMF program sits in the context of broader sets of structural changes and cyclical changes as well. Changes in how the way in which the monetary regime is running, change in particular how the currency is operating, and underlying improvement in the fiscal as well.
Yeah, and where do the Suez Canal receipts get factored into all of this? Because, you know, Egypt obviously is not immune to the geopolitics of the region and has sort of carved itself out as a constructive story the last couple of years. But at the same time, they have taken a hit on the fiscal side because of the Suez Canal receipts.
Yeah, it's fiscal. It feeds into the external account position as well, the current account position. Now, my expectation is that Suez Canal revenues will pick up during the course of this year, provided the regional politics continues to normalise. But for Egypt's external account position, its flow of dollars, it's not the key source of that foreign exchange. Much more important is what's happening with remittances and with tourism as well, and both those sectors have been really, really strong.
Yeah. Simon, thank you so much. That was Simon Williams, Chief Economist for CEEMEA at HSBC. Well, Saudi Arabia's crude sales to China for loading in March rose after the kingdom cut the price of its main oil grade for buyers in Asia to the lowest level in more than 5 years. State oil producer Saudi Aramco will provide around 56 to 57 million barrels for loading next month to China. That compares with 48 million barrels the previous month. The UAE's sovereign wealth fund, a Saudi billionaire family, and Japan's SBI investment have backed Egyptian startup Breadfast in its latest financing round. The Cairo-based firm has closed a $50 million pre-Series C round and plans to go into a much larger funding round during the first half of 2026 to expand its infrastructure and grow its business units. And BHP shares hit a record in Sydney after first-half earnings rose by more than a fifth thanks to a surge in copper prices. The world's largest miner's strategy to diversify is paying off as copper helped offset lackluster numbers from its iron ore business. For more, we're joined by Bloomberg's Paul Eileen Hunt in Melbourne. So, Paul, interesting here, the mix. For the first time, copper has overtaken iron ore's contribution to the earnings. So their strategy of doubling down on copper has really paid off. What does this mean when you look ahead forward to the overall growth strategy of BHP?
I mean, it's absolutely astounding. BHP today is an incredibly different business to what it was a decade ago. You mentioned the rise in copper as part of its earnings. It's now 51%, which, you know, you wouldn't have thought 10 years ago that would be possible. The red metal, it's key for everything in electrification. Deposits of it are getting harder and harder to find, but BHP's strategy to ensure that copper is a much larger part of its earnings was very much the plan of current CEO Mike Henry. So over the last 5 years, they've boosted copper output. They've boosted it from their old Chilean mines, but they've also made an acquisition of Oz Minerals here in Australia that really added to that production. And it comes at a really interesting time because Iron ore is plateauing. Steel demand in China and the subsequent demand for iron ore is plateauing. You know, we're still seeing very robust prices for iron ore, and iron ore has been BHP's biggest earner for so many years, for so many decades, based on China's industrial revolution, if you like.
Yeah.
So, you know, BHP has really repositioned itself. Copper is coming to the fore. It's part of that strategy of Mike Henry's to look at future-facing commodities.
Yeah. Well, speaking of one of those future-facing commodities, we also saw the sale of silver from one of its projects. It's a streaming deal. How does that fit into the overall strategy?
I think one of the things that we often forget about is, you know, major mines often don't just have one commodity in it. And BHP's copper mines, they contain gold, they contain silver, there's even uranium down here in Australia. So it struck an agreement with a company called Wheaton Precious Metals worth $4.3 billion. And effectively what they're doing is quite an unconventional thing in the big miner landscape, where they're streaming that. So Wheaton will take all of the silver ounces from one of the mines, which is called Antamina, and it produced 5.4 million ounces of silver last year. So we're talking a big chunk of silver here. And in return, BHP's sort of selling that before it's been produced at a certain price. It's all about forward selling the byproduct, I guess, and that's really worked out for BHP. The deal itself at $4.3 billion is roughly half the figures floating out there for Antamina, that mine's valuation, depending on which analyst you speak to. So it's really part of their strategy to unlock cash from unconventional means, whether that be infrastructure sales or things like this.
Yeah. Did they have anything to say about potential acquisitions? One of the stories we followed so closely last year was the attempt to acquire Anglo American. Now that's completely been abandoned. But did we learn anything more about where potential acquisitions or M&A fits into the overall growth strategy?
So you're right, M&A has been a buzzword for the last couple of years, especially in the big miner end of town. You know, Rio Tinto had a crack at Glencore just this year. And of course, BHP's blockbuster attempt to take Anglo American last year, it made two approaches before that all fell apart. But for BHP, they're very much communicating to shareholders that they don't need to do deal making. You know, in their organic pipeline of growth, they're expecting copper production to reach 2.5 million tonnes a year by the mid-2030s. So that's huge. But they haven't ruled out doing M&A, but it's certainly something that they're only going to do if it's value accretive, if it makes sense. They've learnt the lessons from a decade ago where they overpaid for you know, aluminium assets or whatever the commodity of the day was, and they're really ensuring that when they speak to shareholders, they're not overpaying, so there aren't going to be write-downs. They're taking a very cautious approach to M&A.
Yeah, great stuff. Thank you for breaking it all down for us, and positive reaction in the stock today. Bloomberg's Pauline Hunt in Melbourne. Well, coming up, why is Russia trying to leverage its old soft power ties across Africa? That story is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Russia wants to grow its footprint in Africa to counter the impact of its ongoing war in Ukraine. Moscow is attempting to do this by boosting its historic economic, military, and even religious ties with the continent. Joining us from Johannesburg is Bloomberg's Anthony Squazan. So why is Russia taking this approach to building influence in Africa? Anthony.
Well, Russia lacks the finances of its geopolitical rivals like China and the US, so it can't spend a lot of money on infrastructure, hasn't got very much to offer in the way of trade. So this is a way of building influence through soft power, through repeating the Russian president's talking points. You know, the church is quite conservative, as is much of African society. So family values, Western decadence, the impacts of colonialism on Africa. So that's the approach they've been taken, along with also pushing the establishment of cultural centers and language centers and offering a lot of scholarships to African students.
Yeah, so this soft power push is really interesting, as described in your big take today. The build out of churches, even a linguistic and cultural push too, building up several centers. How successful have they actually been?
Well, the church has expanded massively. Around about 2021, they were only present in 3 African countries. Today, it's at least 34. They've built hundreds of churches. A lot of priests have crossed over from the Greek Orthodox strain of the religion to the Russian Orthodox strain, and a lot of followers have been converted or have moved across from that church to the Russian church. So it's definitely growing rapidly, and it's having an impact in terms of the way they are seeking to get their message across. And it's very similar with their language and linguistic centers, and their scholarships are also quite popular, and we're seeing a lot of publicity around those. They're really pushing them quite hard through their embassies.
You know, in early reports, we also discussed the push out of Russia to enlist Africans in their war efforts with Ukraine. How has the reception been for that part of their geopolitical push into the continent?
Well, that's the downside of Russian soft power. It has, it's also given them an avenue to recruit a lot of African soldiers. Now, this hasn't been well publicized until the last few months, but now we're seeing almost daily reports of people being enlisted from West Africa right through to Kenya and South Africa and ending up on the front line with Ukraine. Many of them have been duped into signing military contracts. They thought they would go in there to do a different job, working as bodyguards or security guards, or possibly even driving trucks. And instead, they're thrust into the front line with very little training. We had a recent report from All Eyes on Wagner, which is a non-profit, which identified 1,400 Africans fighting on the front line, and at least 300 of those had been killed. So there is beginning to be a bit of a backlash. 1 or 2 countries are investigating this, but it's very early days, but it is beginning to gain traction.
Bloomberg's Anthony Squazen with today's Big Take. Thank you so much. And you can read this story and all our previous Big Takes on Bloomberg.com and the terminal. Just type NI Big Take. Go. And coming up, Emmanuel Macron is in India looking to cement France's relationship with the world's most populous country. Details of his visit next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Zambia's local currency bonds have handed a 25% return to investors this year to top Africa's domestic debt markets. Foreign demand for domestic debt is driving the latest leg of gains in the kwacha, taking its year-to-date advance against the dollar past 20%. Nigerian inflation has unexpectedly ticked lower in January, providing room for policymakers to resume their rate-cutting cycle next week. The consumer price index rose 15.1% year-on-year, compared with 15.2% in December. The slowdown was driven by lower food prices, including staples like cooking oil, grains, and legumes. French President Emmanuel Macron will attend the India AI Impact Summit this week and meet Prime Minister Narendra Modi as the two countries deepen ties. India government reporter Sudhi Ranjan Sen joins us from New Delhi. So quite a big meeting taking place between President Macron and Modi. What can we expect from the meeting between the two?
Well, I mean, the main thing would be the messaging of it, and the messaging in the sense that India and France are deepening and widening their areas of cooperation, moving into areas like AI, critical technologies, defense, space, mobility. So it's a wide range of issues that are going to come up. And this comes up, of course, when India has decided to buy another 114 fighter jets, French-made fighter jets, over several hundred missiles. So it's a multi-billion-dollar order. While that has got still some processes to fill, but that's the choice that India has made. So one is expecting that there would be some kind of discussions. While this, the two leaders meet, the defense ministers of the two countries are also meeting, where issues of the Indian Ocean region, joint patrolling, monitoring these vast waters of the Indian Ocean are all going to come up. So it's all in all a very comprehensive kind of a meeting, looking at all angles of the ties, which is going to result in widening and deepening of relationship. And this comes at a time when the US is rather undependable, both for France and for India. So in a way, both sides are hedging their bets, so to say.
Yeah. Okay. Well, let's see what comes out of it when the two meet later today. Suri Ranjan Sen, thank you so much. A quick look at equity futures. Things are leaning towards the red as we reopen for business for U.S. equities. But we're going to talk more about that in the next show. That is it for Horizons Middle East and Africa. I'm Joanna Versace. And stay with me because we have Daybreak Europe coming up next. This is Bloomberg.